Gold prices are going down, and on top of that, we are in the middle of the war. Just imagine, war is happening, everybody is fearful, and the stocks are crashing. Despite that, the gold is decreasing. This should be the opposite of what actually occurs over the long term. Welcome everybody to the Geeky Investor. This is Uwais, and we're going to be discussing today gold and why gold is really going down while we're in the middle of the war, and what should you really do. Should you be buying gold right now, or should you sell your gold investment? So, beginning with, first of all, as we can see here, the S&P 500, as you can see over the past 2 to 3 months, we can see that the S&P 500 is down 5%. The same is happening to the Nasdaq. From the peak, it was down by almost 12 to 13%, recovering just a tiny bit, although still overall down 8%. Now, as we all know, that really we are in the middle of a war right now. This war is really happening and everybody is getting affected. The prices of oil is increasing like there is no tomorrow. As you can see right here, with the prices of oil, so you can see the Brent crude oil has crossed $100. It actually crossed $110, now $107. As you can see, because with the increase in oil prices, everything will backfire and it will increase. So for example, if the shipment is now more expensive because you have a higher payments for the oil, well then if your shipment is more expensive, well the products and services that you are also shipping will become more expensive, and so it's kind of like a circle whereby one thing increases and all the others will just follow. Well, during these times, just traditionally speaking and historically, what really happens is the prices of oil really increase. However, what we're seeing here right now is the opposite of what actually occurs over the long term. Here we can see that the gold prices, as you can see, it was down by a significant percent from 5,300 all the way into 4,700. So what is really happening? This is what we're going to be discussing in today's video. So make sure you smash the like button because it really helps grow the channel larger. So let's begin with what is really happening. Now, we have the war, as we talked about, and we have historically this AI boom. Now, as we can see right here, you have, for example, if you look at the past year, you can see this AI boom that is, a 50%, almost a 50% increase in the Nasdaq over the past year is mainly driven by this AI trend. So you have this AI boom and the war happening. So, because the prices are kind of, quote, overvalued and the war is happening, you expect the fear and greed index to be in its extreme situation. And this is really what we're facing right here. We are in, as you can see right here, as we can see, this is the fear and greed index. We are at an extreme fear territory right now. So if you have an extreme fear territory, this leads investors and analysts to kind of be uncertain of what the expectations and what the future economy and the profits of those different companies and those different assets will yield. So because of the uncertainty, what happens to the prices of those commodities and those shares? Well, what happens is they decrease, and this is what we have really seen over the past couple of months, with the Nasdaq down by 5%, although it reached a 12% decline. Now, we know that the Strait of Hormuz, which is a critical checkpoint handling over 20% of global oil trade, has become a focal point of concern and war. As tensions rise, we all know that as tensions rise, the oil prices also rise. Now we have seen the prices of each barrel of oil has increased 100, that have really crossed $115 kind of target range. Although now it is back to 107, it is still much elevated and much higher as compared to what it was before the war, which was around $60 to $80 more or less. So within the past 2 months, that is more than 80% increase in the price per barrel. So this, would really show you what really happened at the beginning. Now, if we look here on the gold prices, now what you expect with the war happening, uncertainty happening, prices of these different stocks decreasing, what happens to gold? Well, gold should increase, and this is really what we have seen over the past couple of months. So as you can see, gold prices have really skyrocketed over the past 2 to 3 months, when before the oil started, it was sitting at around 4,000 or $4,200 per ounce. It reached more than $5,200 per ounce. Now, this is really what happened initially. As you can see, as I wrote right here, so gold really jumped from 4,000 to 5,200. But then what really happened, it decreased to 4,700. The question really begs here is, the war is still continuing, and despite all of that, we have seen the gold price decrease. So this is more than 12% decrease and a drop in the price of gold. So really, what is really happening? So first of all, one thing that I wanted to share right here is that some governments and central banks really have rapidly sold their large portions of their gold reserves, because everybody is fearful. They have those different situations in each country. I'll talk on one of those countries, for example, Turkey. So this leads to further pressure on prices and raising questions about liquidity and the need for strategic positioning. So this is what I would like to show you right here. So today's global economy, and I will be reading this slide right here because it really is essential to understand with me right there. So today's global economy is highly interconnected and deeply dependent on energy. As we all know, everything that we do on our daily basis is dependent on energy. Now, although Tesla and SpaceX and these different EV companies, BYD, Exxon, all those different companies are kind of helping us rely less on energy, less on actually, let's say, historical energy or traditional energy, it nonetheless remains very essential and crucial to our daily activities. So, especially oil and its derivatives. So, a rise in energy prices or a rise in oil prices coming from the war that is really happening right now because of the Strait of Hormuz and these other kind of interrelated things, this creates a chain reaction across all sectors. As we said, it's a positive feedback. So from fertilizers used in agriculture to transportation to storage and logistics. So if you have your shipment, once again, if you have your fertilizers, all of those, if those prices increase, well, you as a farmer, or you as a contractor, or you as anybody who is buying these different shipments, you have more prices, so you will have those price hikes kind of be transferred to your own customers, which would lead to a positive feedback whereby one increase leads to the other increase, which leads to the third increase, and then all the way back to the first increase and all the way into this positive feedback. This results in inflation going back up, forcing central banks like the Federal Reserve to respond by maintaining or potentially increasing interest rates to curb demand and stabilize prices. Now, what was happening is that, back in 2023, when the inflation, when the inflation was kind of improving, and then central banks, what they did is that for their interest rates, they have kind of plateaued in 2023, and then all of that time ever since, we can see a decrease or a drop in the interest rates that is coming from the Federal Reserve. Now, as the interest rates decline, you don't have more appetite to invest in the dollars or in these different kind of passive investments. This leads to more aggressive cycle of the economy, leading to more purchasing and leading to higher stock valuations. Now, if you have an increase back again in the inflation, what happens is when you have an increase in inflation, this leads the Federal Reserve to go and increase the prices of the interest rates. If you have an increase in interest rates, this leads to higher borrowing costs, reduced economic growth, and downward pressure on stock markets. And that is why the S&P 500 and the Nasdaq have been down over the past couple of weeks. This dynamic is a key driver behind current market. So Turkey is a nation that is heavily reliant on energy imports because they are not self-dependent, especially on energy, just on that sector by itself. Importantly, so that has led to that has really hit them really hard, despite raising interest rates above 30% in Turkey to combat inflation. Despite all of that, investor confidence has kind of weakened over the past couple of weeks, and this led the Turkish government and the Turkish banks, their central bank, many investors kind of shifting from Turkish lira to the US dollar, leading to a depletion of foreign currency reserves and a further inflationary pressure. As a response, Turkey, what they did is they have liquidated around 10% of their gold reserves, approximately 60 tons of gold. This is more than tens of billions of US dollars. This is more than, yeah, a couple of billions of US dollars. And as you can see, this kind of led to a downward spiral coming from one government and or one central bank, leading to this downward spiral in the price of gold, and then others kind of more losing confidence, and others saying maybe gold is overpriced right now. This is what really led to the decrease in the prices of gold over the last 2 weeks, despite a war that is still continuing. Now, if we go on and see gold, what is gold really in essence? What it is a commodity. Unlike stocks and unlike other companies where you invest in, and where I personally invest much of my wealth in. So basically, with gold is just a commodity. So you expect the price of this commodity, or basically gold, to increase based on demand and decrease based on supply. So it's just demand and supply. Whenever you have more demand, you have more and higher prices. Whenever you have more supply, you have a lower price. So this is really what gold is. It's a commodity. However, as an investor, it is always essential to focus on the long term. In the short term, markets always don't really make any sense, and it's always unpredictable. So whether it's gold, stocks, cryptocurrency, whatever it is, you always have to understand the fundamentals of what you are investing in, and then based on that, based on the actual valuation, the financials, what that asset really produces, and what's your expectations on that, then you can make an informed decision rather than just relying on these different news. So prices can be influenced by politics, economic data, and even minor news and events. So this is really what I wanted to tell you in this video. And then just one last thing that I wanted to share right here. Now, personally, what I do is that I focus more on the stocks. And the reason is stocks really are assets that generate income, as compared to, for example, gold, which is, if you're buying 10,000 ounces of gold, if you have that much, I don't know, that much money, well, then 10,000 or 1,000 ounces of gold after a year is still 1,000 ounces of gold at that time. So 1 ton of gold today will still be the same ton decades from now. So whatever happens, it is still the same. So in essence, you could think of that as a kind of not a currency or a commodity that does not lose. However, at the same time, it is something that really have not changed. Whereby, if you focus on stocks, this is really owning a company. And whenever you own a company, it's a productive asset. So a company sells products and services, and these products and services generate extra money. The extra money make you kind of increase and make your business larger, buying more products and services and selling even more products and services, kind of leading to this bigger and bigger circle. So it's an asset that generates income. This is what really stocks are, as compared to gold, which is just basically a commodity. So the key lesson that I wanted to share right here is, regardless of your investment preference, whether it is gold, whether it is cryptocurrency, or even if it is stocks, you should always focus on the long term to help you avoid being misled by short-term market noise. Let me know if you guys think this type of videos is really helpful, and I will see you in our next video.